So you see the market literally open and literally just went immediately down. I was expecting a sweep of these lows to target back up these highs to target this daily fair value gap, coupled with the relative highs. But once we broke below this new day opening gap, now we're inside this weekly. This is where I wanted to see some bullish order flow. You see, we did not get no bullish order flow at all. See how we closed, smacked the low, respecting the mean threshold. I'm sorry, equilibrium of this new day opening gap. Displacing lower. We already swept out all the sell side, so I was just waiting on some bullish order flow. We already got a bullish breaker here. Low, high, lower low, higher high. You see, once it came down, that's where I got my long. Came down, respected this down close candle, coupled with the breaker. Bought, scared in some more contracts here. Got out at that new day opening gap that we just spoke about. And you see here, came down, and it's coupled with a fair value gap, and it's coupled with a this change in the state right here. So all of these confluences was the reason for my trade. So we had the sweep, breaker, change in the state, fair value gap came. You see how it came down, closed, open, came down, respected the most sensitive part of the order block from the closed price to the highest wick. Extend that through, which is the OB's wick. Look how it comes down perfectly, creating another change in the state right here. Most sensitive part is from the opening to the high close. Look how it comes right here once again, respects it perfectly. See, right here, another change in the state. So you see it just kept doing it over and over again. And then TP right here. Stop loss was literally below this candle. Once I scaled in, put my stop loss right here, below this down close candle. And you see the business, 475. You see, only one trade today. So this is a potential kind of trade I'm looking at. The same breaker, low high, lower low. I'm thinking about getting into this one, just getting into one stop loss right below. I may try that. Alright, we long here. Only in one macro. Targeting the new day opening gap. We have these relative highs right here. We take this high right here, put it to break even. Well, this 50 points. I'll take. This wasn't planned. I actually like the delivery. I'm gonna get into another contract. Risking what, 25 points? 25 points times 2. 25 points times 2, 25, $2 a point. That's 50, so I'm risking $100. I'm up on the day, what, 470, so. actually have generated highs. All right, I would like for it to stay here in the upper half. If it come down to this lower half, it's a little problematic. And good thing I didn't move my stop loss here. I was gonna move it once it was up here, but I like that it generated these highs. If it come and sweep it and it stay bullish, I'll scale into more contracts. Did we get a sweep? No, we didn't. I want to see it stay in this upper half. I do not want to see it come to this zone right here. 13 seconds to this candle. That's not looking good. If it closes in that in that purple box, that's not good. I like how the bodies stop right there. It's the only good sign right now. But it's cool. That's why risk management is so important because if I would have gone to the same amount of contracts as I did on the first trade, I would have gave back all of the profits that I won earlier. So even if I take this $110 loss, I'll still be up what like 350 on the day still. This was a trade. This was a trade recap turned into a trade. see, we took our first loss of the day. So much generated liquidity. Man. So yeah, this is my first loss of the day. So we got one win, one loser. We're still up 350. So this is the second day on this take profit trader funded account. It says I have to trade for 5 days